CPI is collapsing across the globe. This is global CPI in 26 charts. So let me ask you, what do you think? Will the global CPI slowdown continue? Welcome to the Become a Better Investor community. My name is Andrew Stotz. Let's get started. Remember, you can download this chart deck for free by clicking on the Get the PDF link at myworstinvestmentever.com or by clicking the link in the description. Now, this is a CPI analysis I do on a monthly basis across markets to try to understand what's going on. I take each country in the world and I GDP weight their CPI to come up with my own aggregates. What I can find is that global CPI is falling fast in both developed markets and emerging markets. So let's look at it. Right now, economies across the world have a GDP of about 90 trillion US dollars and a CPI of about 6.2%. Now, in the developed markets, we can see that the CPI is lower at about 5.7, of course, driven by the US. And in the emerging markets, CPI was about 6.9, so above the global average. The world CPI was 6.2, as I mentioned, down about 0.4 percentage points from 1 year ago. And month on month, it was down about 0.8 percentage points. That's a massive fall. Developed market CPI was 5.7, which is down nearly 1 percentage points from 1 year ago. And month on month, it was down about 0.8 percentage points. So a steep fall. And it has moved from being in line with the world CPI last year to currently at about a 0.5 percentage point discount. Let's look at emerging markets for a moment. We can see that emerging market CPI was 6.9%, which is about flat versus 1 year ago. But month on month, it's coming down by about 0.8 percentage points. It's moved from being in line with the world CPI last year to the current 0.7 percentage point premium in emerging markets, but it looks like that premium could be falling. Let's look at the world by regions now. That was just looking at all the developed countries and all of the emerging countries. So we're going to look at the Americas and Europe and developed market Asia. Now, what we can see is in developed market America, CPI is falling fast. In developed market Europe, it's sliding. And in developed market Asia, it's on actually a steady rise. So developed market Americas is the largest of the developed market regions with about 25 trillion US dollars of GDP and about 4.9% CPI. Developed market Europe has about 14.9% GDP and 7.1% CPI, so considerably higher than America's. And developed market Pacific has about 7.6 trillion GDP and 4.7% CPI. So I'm going to show a chart here which tries to help us understand that developed market America's CPI is falling fast and developed market Europe is sliding and developed market Asia is on a steady rise. So let's look at it. Developed markets America's CPI was 4.9%. That's down 3.4 percentage points from 1 year ago. Month on month, it's down by 1 percentage points. That's a massive fall. It's moved from a 1.7 percentage point premium to world CPI last year to the current 1.3 percentage points discount relative to world CPI right now. And of course, that's being driven by aggressive rate hikes in America that is slowing things down. And for those people that want to speculate on whether we're going to have a recession, well, this is some good indication. When CPI starts really falling, it's usually a signal that we are or entering into a recessionary phase. Now, let's look at developed market Europe. CPI was about 7.1%. That's up about 0.9 percentage points from 1 year ago. But month on month, it was down by about 1.1 percentage points. So that's falling, pretty considerably in the last month. It's moved from a 0.5 percentage points discount to the world CPI last year to the current 0.9 percentage point premium to world CPI. That tells us that though Europe is coming down, it's still relatively high. And what about developed market Pacific CPI? Well, it was about 4.7%, up 2.4 percentage points from 1 year ago. And month on month, it was up 0.4 percentage points. What does that mean? It means that it has moved from a 4.4 percentage point discount. Remember, developed market Asia is specifically hugely Japan. So it has moved from a 4.4 percentage point discount to world CPI, and now it's closing that discount, and now it's at about 1.5 percentage point discount to world CPI. Remember, you can download this chart deck for free by clicking on the Get the PDF link at myworstinvestmentever.com or by clicking the link in the description. All right, time to get into the emerging regions. We've just been through the developed market regions. And what have I seen in these emerging regions? Well, first of all, emerging market Europe and Asia CPI is falling. Middle East and Africa and frontier markets are still on fire. So let's look at this in more detail. Emerging markets America had a small GDP of about 3.8 trillion and a CPI of 7%. Emerging market Asia's had a massive GDP of about 25.7 trillion. Of course, China is the main contributor, and their CPI is about 1.9%, so quite low. Emerging market Europe had a small $3.9 trillion GDP and a massive in emerging market Europe, they have a massive 17.7% CPI. And then there's emerging market Middle East and Africa, which had a tiny 1.7 trillion GDP and a high 11.5% CPI. And finally, as frontier markets, they're relatively small. They only have a GDP of about $2.9 trillion, and they have an extremely high CPI of 31.2%. So let's look at this in a little bit more detail. The emerging market America CPI was 7%. That's down 2.4% percentage points from 1 year ago. Month on month, it was down by about 0.8 percentage points. Now it's moved from a 2.6 percentage points premium to world CPI last year to the current 0.7 percentage point premium that it's at right now. So the Americas has been at a premium relative to the rest of the world. So emerging markets, and that's emerging markets, Americas. Now emerging markets Asia CPI was 1.9%, which is just tiny. And it's down from down by 0.6 percentage points from 1 year ago. And month on month, it was down 0.4 percentage points. Now, this is an interesting one. You know, what's happening in emerging Asia? It's already really low inflation. And now we can see that it's coming down even more. We're going to see the country that's contributing to that in just a few minutes. So emerging market Asia CPI has moved from a 4.1 percentage points discount to world CPI last year to the current 4.3 percentage points discount. So really not much movement relative to world CPI. Now emerging market Europe CPI was 17.7%. Believe it or not, that's already down by 6.1 percentage points from 1 year ago. And month on month, it was down by 5 percentage points. There's one particular country that's driving this. And then emerging market Europe has moved from a 17.1 percentage point premium to the world CPI last year to the current 11.4 percentage point premium. So really is coming down quite substantially. And then there's emerging markets, Middle East and Africa, which CPI was at 11.5%. That's up 6.4% from 1 year ago. And month on month, it was up by 0.4 percentage points. So we can see that in the emerging markets in the Middle East and Africa, we still have some high CPI. And that emerging markets, Middle East and Africa CPI has moved from a 1.5 percentage points discount to world CPI last year to the current 5.3 percentage points premium. So it's gone from a lower than world average to considerably higher than world average. And finally is the one that's really dangerously on fire. That's the frontier CPI, which was 31.2%. That's up 14.7% from 1 year ago. And month on month, it was up just 0.3%. So what's important here is CPI in the frontier markets is high, but it appears to be that rise has slowed down. So this frontier CPI has moved from a 9.9 percentage points premium to world CPI last year to the current 25 percentage points premium. This region was up year on year and month on month. So watch out for emerging markets frontiers. Let's go into the countries. We're going to look at 5 of the top developed countries, and then we'll look at 5 of the top emerging countries. Now, within the developed countries, only U.S. CPI fell year on year. All top 5 developed market countries except Japan fell month on month. and UK CPI is double the US. So the top 5 countries in the developed market sphere, well, the US is number 1 with a GDP of $23 trillion and a CPI of 5%. Japan is at 4.9 trillion in GDP and a CPI of 3.9. Already, that's already pretty huge for Japan at 3.9 compared to what they're used to over the decades. Germany's $4.2 trillion GDP is relatively large, and they've got a 7.5% CPI. Here's where it gets interesting. The UK has about $3.2 trillion in GDP, and the inflation is at 10.2%. That is the highest within the top 5 developed markets. And France has a GDP of about $2.9 trillion, and luckily for them, their GDP hasn't gone on fire like it has in the UK and Germany, but still, it's relatively high at 5.8%. So let's look at this for a moment. I've got a chart here showing the progression. We can see US CPI was 5%, and that's down 3.5 percentage points from 1 year ago. And month on month, it was down by 1 percentage point. That gives you a picture at how fast CPI is falling in the US. It's moved from a 1.8 percentage points premium to world CPI last year to the current 1.2 percentage points discount. So it's like inflation rushed through the US, then they brought it down through Fed tightening, and now it's slowly impacting the rest of the world. So Japan CPI was 3.9%. That's up 2.7 percentage points from 1 year ago. And month on month, it was up 0.6%. So still rising in Japan. It's moved from a 5.5 percentage point discount to the world CPI last year when it was just at 1%. And so Japan was at 1%. And then the current discount is 2.3 percentage points. So they've halved the discount of the amount that the Japanese CPI is below the world CPI. And if world keeps coming down, it's probably going to meet Japan. And Germany's CPI was 7.5%. That's up 1.9% from 1 year ago. And month on month, it was up 1.3. Sorry, it was down 1.3. So we are seeing that CPI is falling in Germany. One of the big drivers of that, of course, is the cost of energy, which has come down, particularly natural gas. In Germany, CPI has moved from a 1.1 percentage point discount to world CPI last year to the current 1.3 percentage points premium. What about UK? Well, UK CPI was a massive 10.2%, which is up 3.1 percentage points from 1 year ago. And month on month, it was down 0.4 percentage points. So for our friends in the UK, it's been brutal as far as CPI is concerned, but maybe it's starting to come down. I wouldn't say that there's a super strong signal. If you look at this chart, you can see that UK is kind of stuck, whereas we can see a fall happening in the US, a fall happening in Germany, and a fall happening in France. So let's look at France. CPI was 5.8% in France, up 1.3 percentage points from 1 year ago, and month on month, it was down by 0.6%. So it hasn't been too high in France, and it's starting to come down. It's moved from a 2.1 percentage points discount to world CPI last year to the current 0.4 percentage points discount. Now it's time to get into our final area. We're going to look at the top 5 emerging countries in the world. And here's what we can see is that big CPI fall in Russia, China, and India, and more minor falls in Korea and Brazil. So watch this space because it is pretty extreme what is happening. China has a 17.5 trillion dollar GDP, and its inflation right now is at what? 0.6%. That's extremely low. What about India? Well, India has a GDP of 3.2 trillion, so relatively small on GDP side, and an inflation rate of 5.6%. Korea has a GDP of $1.8 trillion, and that is a CPI that they're sporting right now of 4.3%. Now, some of you may say, well, wait a minute, Andrew, why are you calling Korea an emerging country? Well, I'm an investor. I'm not an economist. So when I look at the investing universe, MSCI classifies Korea as well as Taiwan into emerging. And it's not because of the economy, but it's because of the restrictions within the stock market that makes it more difficult or more costly to buy and sell for foreigners. Now, here's where it gets interesting. Russia is at $1.8 trillion in GDP, and their CPI is down to, wait, what? 3.6%. That is extremely low. And Brazil is about $1.6 trillion in GDP, and it's down to about 4.7%. All right, so let's look at this in charts. We're going to go through charts for each one of the countries. And the key thing is that every one of these on this chart is falling. China, this is what I think is fascinating. China CPI was 0.6%. That's down about 1 percentage points from 1 year ago. Month on month, it was down about 0.3 percentage points. And it's moved from a 5.2 percentage points discount to the world CPI last year to the current 5.6 percentage points discount. Now, the point is that CPI relative to the world hasn't moved that much in China. But what is fascinating to me about China is the low level of CPI. It was as high as about 2%, and now it's down at 0.6. How could that be in March? Well, I had two friends come to visit me, a Chinese and a Westerner, who both live in China, and they came to visit me here in Thailand, and I was asking them, how are things going? And basically, they said something I thought was interesting. They said that the government lockdowns has really broken the spirit of many Chinese people, and therefore they're just not firing up the economy the way that hopefully, they will at some point. And that could be why we're not having strong demand for commodities. We're not having inflation in China, and we're not having, if China had inflation, it would be exporting it, but they don't have it there. That's fascinating. So India's CPI was 5.6%, down 1.5 percentage points from 1 year ago. And month on month, it was down 0.8 percentage points, so down there. And then it's moved from a 0.4 percentage points premium to world CPI last year to the current 0.6 percentage points discount. All right, let's look at Korea. CPI was relatively low at 4.3%, and that's up about 0.2 percentage points from 1 year ago, so hardly moved. Month on month, though, it was down by 0.6%. So the trend is down in Korea also. Korea's CPI has moved from a 2.6 percentage point discount to world CPI last year to the current 2 percentage points discount. So not a massive amount of change relative to world. All right, Russia. Whoa, this is crazy. Look at the Russia chart right here. Russia's CPI was 3.6%, down 12.9 percentage points from 1 year ago. And month on month, it was down a whopping 7.5 percentage points. It's moved from a 9.8 percentage points premium to world CPI last year to the current 2.7 percentage points discount relative to the world. That's an incredibly fast fall in inflation. Of course, we're assuming that these numbers are right, and we know that there's plenty of manipulations going on. But for right now, based upon what we can see, there's a massive drop in CPI in Russia. And then there's Brazil, where CPI was 4.7 percentage points down 6.5% from 1 year ago. Month on month, it was down 0.9 percentage points. Now, what's interesting about Brazil is that I think they've been through it before. They knew that if they didn't raise rates at an early stage to then bring down inflation, they could lose control of their currency. And so they were very aggressive at bringing up inflation rates, and that's part of what's driving down the CPI. So Brazil has moved from a 4.5 percentage points premium to world CPI last year to the current 1.6 percentage point discount. Whew, we went through a lot in that presentation. So what do you think? Will the global CPI slowdown continue? Remember, you can download this chart deck for free by clicking on the Get the PDF link at myworstinvestmentever.com or clicking the link in the description below. That is CPI collapsing across the world in 26 charts. Grab it and let's discuss.